Hello, students. Welcome to etechtales. Today, we will begin with the Unit 2 that will focus on the firm, the stakeholders, and the objectives of the decision making strategies that the firm uses to encourage its great growth in the market. Beforehand, in the previous class, we have done about the factors that relate directly to managerial economics, that is, the different characteristics. Then there was economic analysis. Then there were various terms that relates to the definition of managerial economics. We have done the scope of the managerial economics, which is very important for your exam point of view. Please do note this down in your copy and in your mark sheet and try to remember the different important key points from here. They are very repetitively asked. Just go through this once or twice before your exam. They are very basic things that I have already done in the class, which will help you out to score really good marks. So here we will talk about the firm, the stakeholders, and the decision making strategies. So for the intro, we can tell that the objectives of the Unit 2, they are focusing on the existence. Then we will understand the concept of economic profit and accounting profit. There is a difference between both. We will do it in the later. We will appreciate the use of opportunity cost. Now, what is opportunity cost? Opportunity cost is the cost foregone by the company or the firm to get certain activities done for the current scenario. For example, that you have two offer or two projects to do. One project involves you to make a profit of around, a project has come and you can make a profit from that project of around 10,000 rupees. Another project came simultaneously. The thing has to come simultaneously. The second project came, and there you have to work more hours, but the profit that you can make is almost 12,000. So here in this scenario, due to the factor of time and management, you chose to get a better profit than the last one, wherein the intensity of time to devote was less in 10,000 rupees profit one, the first one, but still you let it go. So that is called the opportunity cost is foregone. That could have been earned but have been forgone. In the next portion, we will understand about the different objectives of the firm and we will try to distinguish them amongst each other. Right? So, here in the introduction part, this is of in your university material, this thing is given in a really big and haphazard manner. I have summarized it up in my own words and I'm going to say it paragraph by paragraph. Just listen to me very carefully whenever I'm saying these things because they mean you to make it very easily understandable so that you can understand and make a common sense out of it and you can write it down in your answer sheet. You can understand what I am trying to say. So let me explain the role of the firm of the managerial firm in managerial economics. In this introduction part, only this is there. Now we'll talk about the firm, as firm is an organization that produces goods. Okay. So the firm this produces goods and services for sale, and it plays a very crucial role in our economy. In India, thousands of firms generate most of the country's goods and services, with the remainder produced by government and non-profit organizations or institutions, which means some portions that are made by the firm and the rest is made by the government and the non-profit institutions, right? Now, one key factor or the key determinant of the firm's behavior is determined by the state of technology, which sets limits on how much a firm can produce. This technology includes all of society's knowledge in industrial and agricultural arts. Production involves transforming various inputs into outputs, whether these are tangible goods like steel, automobiles, etc., and or services like banking and insurance. All right. Now, the inputs that they have been used, they are defined or are the resources a firm uses in its production process. For instance, major steel firm utilizes iron ore, coal, oxygen, skilled labor of various types, and machineries such as blast furnaces and rolling mills. These inputs fall into two categories. One is the human resource, which includes labor and entrepreneurship, and the second one is capital resource, like the land, the man made assets, etc. Man made assets in the sense machineries, then infrastructural projects, etc. Now, the thing is that there are four major factors of production that are that we actually know since our college days, or you can say 11, 12 also we have studied that. That is the land, labor, capital, entrepreneur. So these are the four major factors of production, with their corresponding returns being rent, interest, wages, and profit. Right? A firm's primary function is to purchase these resources and convert them into saleable goods and services. This creates a circular flow of economic activity between individuals and firms, highlighting their interdependence. For example, labor has no market value unless a firm is willing to pay for it, and firms cannot justify production without customer demand. The firms, they earn profit by satisfying this demand. Okay, demand of for consumption of different goods and services. They have to fulfill that, right? So firms earn profits by satisfying this demand, and in return, resource owners receive wages, rent, interest payments, etc. But supplying goods and services, firms provide employment and pay taxes, which the government uses to offer services that firms cannot efficiently provide, such as education and defense. Right? So, firms can be classified into two different categories. Sorry, they are of many types. First is the private, then the public, then joint, then non-profit firms. Okay, and there is by point of ownership, they are 1% company, then there are partnerships and corporations. Now, additionally, some firms, they use universities, library, public libraries, hospitals, museums, churches, voluntary organizations, cooperatives, unions, professional societies, etc., to serve specific group of clients or members. Correct. So here understanding the concept of a firm is essential in managerial economics, as it allows us to delve deeper into the firm's objective and its role in the right. So let's move on to the objective of the firm. Here, the objective of the firm is typically referring to the primary goal which aims to achieve. Right? The primary one is profit maximization. It is not only that, there are many other factors that are depending on the objectives such as the nature of the business, its industry, market conditions, and management philosophy. Right? Management psychosophy, psychology, spelling is wrong. Management psychology, right? Some common objectives that are included here is profit maximization. Now, why profit maximization? It is that it is the most traditional objective that the company will want to have maximize its profit. Yes, by increasing its revenue or by reducing the cost of expenses or the cost of raw materials it is using. Correct? Now, second one is market share expansion. The firms might aim to capture a large share of the market, outspacing competitors by increasing its customer base. The third one is the customer satisfaction. You have to prioritize your customer needs and their satisfaction by providing good loyalty and by ensuring that the company goes on to provide in a repeated business. There is going to be innovation and growth, like the foster that like we are going to foster different kind of innovations, and we are going to continuously develop new products and services to stay ahead in the market and expand the business. Correct? Then there comes the most important thing in the objectives of that is CSR, corporate social responsibility. Now, what is it? There are certain companies in India that are very much providing corporate responsibility as they are by the Companies Act enforced to apply these things. Okay, now CSR policies are there that are written down in the Companies Act, which the companies has to follow and provide in the year-end report, that is the financial report, wherein CSR report is also to be added. Now, which companies they can do, that is some companies which have a certain criteria under the Companies Act, they are enforced to do so. Okay, why CSR is applicable? What are the activities? The first activity is to provide certain financial contribution to the government. The companies which get CSR, which provide CSR, they contribute certain portion of their profit to the government by way of doing different kinds of projects which will involve development of infrastructure. Then it will involve development of rural school and colleges. Will also go on for development of housing societies for poor and needy people, right? These are some of the things that the government should do, but as a CSR policies are there, the Companies Act is somewhat enforcing the companies to contribute to the society. Some companies focuses on contributing positivity to society by being in socially responsible practices, environmentally sustainability and ethical operations. Right? Then employee satisfaction and development. Firms may aim to create a positive work environment offering growth opportunities and prioritizing employee well-being. Then comes the long-term sustainability. It is for ensuring the business viability and the success over the long term of management, wherein the managing resources efficiently is going to adapt to changing market conditions. All right. The last important one is the value creation. Why value creation is important? Once a company gets a good amount of goodwill or recognition in the industry, People will come, they will contribute the in a form of shareholders, in the form of stakeholders, and in the form of customers as well. Because customers also want to get delivery of really good and high quality products and services. So regarding the other factors, I'll say that if you are writing these 8 points, they're enough to get a good score of 8 out of 10 or 9 out of 10. The question will be asked for around 8 to 10 marks. Okay. You have to conclude your answer also. And do not only write the points, please write something beside the points, like I have presented to you. That will justify the key points. Memorize the key points instead. That will help you out. Now, there are specific objectives of the firm that are based on various factors. That is not only on the objectives, but they are parallelly going to be based on the objectives of the firm. For example, there is the stage of development, what is the industry type, what is the competitive landscape, then what is the vision of the leadership of the company, what is the CFO thinking, what is the company's aim in the market, how it is going to provide the proper and great goods and services on people, the customers, etc. Now, many companies they have multiple objectives as they aim to balance and integrate into their overall strategic planning to ensure sustained growth and success. Maximum profit maximization is a dormant objective of the firm because there are others like maximization of the revenue, then maximization of the firm's growth rate, then there comes the manager's own utility or satisfaction, then making a satisfactory rate of profit, then a long run survival of the firm, then entry violation or entry prevention of the other companies like the startup companies for example. So how to restrict the competitors, and we have to control the risk avoidance of the company itself. So these are the other points that you can write as objectives of the firm, right? So with this, I am ending this class. I'm ending this video. In the next two videos, I am hoping that I will be able to complete the unit 2. So thank you very much and share the class.